Apes and Apats, welcome back to the channel. Junior Uncle Sam in the building, where unlike my elder uncle, we don't take money from you, we give you money in the form of AMC MOAS, golden nuggets, and chicken tenders. Now, we need to get into exactly what is going on today, what happened in the beginning of trading, what we are seeing unfolding right now, as well as a bit of very positive news that came out for the markets that I think will give us fuel for that next rally. So slap that ass, let's get into this video. Hit that like button and subscribe to the channel if you guys have not already. Get yourself those free stocks down below in the description. We both move in public, and if you guys want to come trade with us, link down below in the pinned comment. Let's talk about it, guys. So as soon as we opened today, we gassed up straight to $34.33 per share, and then we came right back down. Yes, we did get our first volatility halt, and I think that spooked out a lot of people because you've heard over the past year people talk about volatility halts like other creators that really don't know what they're talking about. Let's be honest here. A lot of these guys have not been in the markets a long time. A lot of them joined in early 2021. And unfortunately, they don't give out the best information. These volatility halts spooked people earlier today. So I do think you had some people that paper-handed because they're like, oh, fuck, here's the first volatility halt. It's over from here. They're going to crush the squeeze. They're going to crush this next rally. And that is not the case, my friends. We are now up 3% again. It doesn't it doesn't end momentum. It doesn't stop momentum. It slows it down temporarily, right? So you've seen a lot of people that panicked when this happened. And if you don't get anything else out of this video, which you will, all I want you guys to know is volatility halts are not the end of a momentum movement. They're likely a sign it is just starting, especially on the first volatility halt. Give me a break. We'll talk more on the 10th or 20th volatility halt if we're really going into the MOAS as some indication of a lot of shorts covering, but we're not getting any of that as well today. And these volatility halts really mean nothing in the grand scope of the trade. If you sold out after this volatility halt, you missed out on a lot of money, and I'm not your financial advisor. Do what you guys please, but it's definitely not a smart idea to sell out because of a volatility halt itself. Now, let's get into some of the key information, the good news that is coming out today. Ladies and gentlemen, check this out. It says oil dips as Russia signals its de-escalating conflict in Ukraine. Developments with the war in Ukraine and ensuing sanctions on Russia have caused a wild price roller coaster in the oil market. It talks about oil, and then it says oil slumped as Russia said it was taking steps to de-escalate the conflict in Ukraine, while floating the possibility of a meeting between President Vladimir Putin and his Ukrainian counterpart Volodymyr Zelensky. To be more specific, Russia is saying they are going to scale down operations against Kyiv and the northern city of Chernihiv, but does not represent a ceasefire. In quotes, this is not a ceasefire, but this is our aspiration gradually to reach a de-escalation of the conflict, at least on these fronts. Now, this is very important to point out because this would be one of the biggest, if not the biggest, uncertainty and fear catalyst in the markets that is slowly coming to an end. It's definitely not over. There can be things that obviously do come about that are not good for the markets, but this is a solid step in the right direction. That's why you're seeing a lot of stocks that are heading to the upside, because essentially once this war ends, that'll be a huge burden off the backs of, say, the CPI reports, right? Because energy should come down. Just with them ending this war, energy prices will come down, oil will come down, commodities will come down, and that will reduce potential inflation in the future, and that's going to be a positive for the markets because the Fed might not have to raise rates as many times. So I have to become a little bit more bullish, but until this is actually done and the fighting stops and the markets recognize that, not too much is actually fundamentally changed, but it's definitely a shift in momentum to the positive side. Now, as you guys already know, here on this channel, I like to shoot it to you straight and give you the good and the bad so you can make the best decisions for yourself. Now we got to talk about the bit of the bad news. So it says US 2 to 10 year curve inverts for the first time since 2019. This is always a recession indicator, but it could take a little bit of time to go into that recession. Like you can see right here, let's go ahead and refresh this. Under this black line means it inverted, means you will get paid more on a 2-year treasury bond rather than a 10-year treasury bond. And the first time it inverts, that's when you do see a recession. Could be a couple months, it could be a year after it reverts, but it always happens. As you guys can see right here, the gray is recessions, and under the black is when the yield curve inverts. And boom, recessions, recession, recession, recession. And the weirdest one was actually 2019 when the yield curve inverted down here in August, and then we seen the pandemic in 2020. Pretty interesting. There's a lot of debates on why this actually happened, if this was foreshadowing the pandemic or not, if somebody knew about it. Who knows exactly? Not the point. It's a recession indicator, so that is coming. Make sure you guys are prepared for it yourself. It could be in a couple months, it could be in a couple years, but it is coming. Now, back to AMC, back to some of the data that you guys need to know for the day. The short interest is coming in at 20.76%. Current shares that are sold short of 107 million. Cost to borrow max is at 14.39%. Utilization still at 100%. You are getting return shares of 3.09 million. Borrowed shares of about 1 million. So that's a borrowed change of, or essentially covered shares of 2.09 million. Now, this doesn't even make up the amount of shares that we have seen borrowed over the last couple of days. So the short interest has actually continued to increase, and this really doesn't do anything to move the needle. And that just kind of goes to show you, if this is all the shorts that covered 3 million, whereas obviously we've had a lot more borrowed shares in that same time frame, but even 3 million covered shares, look what it did to the price of AMC. What do you think is going to happen when 107 million shares need to be covered? It's going to get buckshit, batshit crazy in the stock market, straight to tendy town. Now, days to cover is sitting at 2.75 as well. That has only come down from 3, so it's still very hard for shorts to get out of those short positions. For the option activity, we're looking at 142 orders for the day, totaling $250.69 million. Positive order value of 65%, and hedge funds are taking advantage of this to load up on their option positions. Take a look for expiration April 1st, $35 strike, obviously a call, spent 122 grand on that. April 22nd, $20 call, spent 300 grand on that. April 1st, $25.50 call, spent 119,000 on that. April 1st, $34 call, spent $47,000 on that. We'll get more into depth on the actual option chain in the next video later on today. You definitely want to pay attention to that, because that's going to be a more forward-looking video, what I kind of expect to happen over the course of this rally. You guys will find a lot of value out of that, so just wait on that. But you're almost looking at $1 billion going into AMC options in the past week. 644 orders totaling $857.19 million with a positive order value of 76%. This is why I really like to pay attention to the options, because if this rally was really done, I don't think people with more knowledge than us and more money than us, like hedge funds and institutions that want to make money as well alongside the apes, I don't think they would put their money to work in AMC options that expire this Friday for a $35 call. That's $5 out of the money right now. That implies to me that we are still going to see another move higher this week. So that's very important to point out, and it is also important to point out that these options just went in about 7 minutes ago. So it wasn't even earlier in the day at the start of open when these options obviously did well, right? If you bought a $35 call expiring Friday and the stock price went to about $34.60 during the open, that would have done well. But they just bought these options about 7 minutes ago, roughly, right? The time's up here. It's 14:59 right now for, I believe this is military time. And you could see it's 14:52 the time these options did go through. So about 7 minutes ago. Pretty wild. And I think that's definitely a good thing. Now, as far as the actual Stocko tracker data, let's go ahead and refresh this. 137,000 calls that are out of the money, 107,000 that are or in the money 137,000, out of the money at 107,000. So looking pretty good right there, but it really matters what's going on the daily, on the weekly options, because that is really what fuels a lot of that hedging. As you guys can see, 25,000, 25,000, 14,000, 95,000 for volume on these options for the day. That's fueling a lot of this rally that we are seeing. Shorts are not covering. You're also seeing a lot of FOMO that is still heading into AMC stock. So all of this is very, very good news. Besides, obviously, the yield curve inverting, not so good. And just because of what we've seen today with Russia and Ukraine, that headline has dropped the probability of a 0.5% rate hike by about 2%. So if we do see the war come to an end, it's going to dramatically bring down this probability of a 0.5% rate hike, and that is going to lead to more bullishness in the markets broadly, but as well for AMC stock, because AMC preferably wants to keep interest rates as low as possible, because if they do have to borrow money, refinance, anything like that, it's a lot easier to, right, if interest rates are low. Something else I do want to point out is that AMC does not have all too much attention today as far as the trending now stocks on stock twits. Robinhood's number 1, IPOF number 2, and this number 3. I actually own that at 28 cents. Shout out to penny stocks. And AMC is actually the 7th here on the list. So that's really good. The fact we are positive today and it's not even getting that much attention comparatively to other stocks. A big win in my personal opinion. Now, that is basically going to be all for this video. We're going to get into a deep look into the technical analysis in the video that will be posted right after this one. So make sure you guys come watch that video. That's going to be very important. But overall, we did very well today. Came up, touched the 200-day moving average, came back down to kind of retest that $25 low at the low of the day during that halt. Not quite down there. We did come down to about, what did we actually come down to? About $30. Well, wow, I'm stupid. $26.50 per share. To come down and touch this low, retraced back up now to $30.21 per share. So it's looking pretty damn good. We got a lot to talk about in the next video. I want to keep this one short, sweet, straight to the point. So hit the like button, subscribe to the channel, as well as comment down below any comments, questions, or concerns that you guys do have, as well as get yourself those free stocks with Webull, Moo, and Public. And if you guys want to come trade with us, link down below in the pinned comment to do so for that one. Thank you for watching, and I will see you in the next one.